Good morning this Wednesday, the 7th of August. I'm Grady Wolf, market analyst with Bell Direct. Over in the US on Tuesday, the steep sell-off of the previous three sessions took a pause, with stocks recovering some losses as investors took a pause from the recession-fear-driven pullback. The Dow Jones rose 0.76% on Tuesday, the S&P 500 rose 1.04%, and the tech-heavy Nasdaq ended the day up 1.03%. US investors began the US market correction last Friday after US jobs data came in weaker than expected for July, which sparked the broad market tumble for three sessions amid rising recession fears. The rally on Tuesday has identified some key areas of the market, though, that still have growth potential, including small caps and rate-sensitive groups. Across European markets overnight, markets in the region joined the global market rebound on Tuesday to close mostly higher in Europe. The STOXX 600 rose 0.2% on Tuesday. Germany's DAX added 0.09%. The French CAC declined 0.27%, and in the UK, the FTSE 100 ended the day up 0.23%. In Asia overnight, Japan's Nikkei recovered from its worst session since the Black Monday crash of 1987 on Monday to close up 10.23% on Tuesday, as heavyweight stocks in the region, including SoftBank Group Corp and Mitsui, rose at 12.06% and 10.43% respectively. Japan's markets have been sliding of late since the Bank of Japan raised rates to their highest level since 2008 on July 30, causing the yen to strengthen, which placed pressure on equities. The local market tanked over 3% on Monday before recovering to close 0.41% higher on Tuesday, taking no lead from Wall Street's worst session in years on Monday night. Local investors yesterday were more focused on the RBA's rate decision and key corporate earnings results released to provide outlook for FY25. The RBA maintained the nation's cash rate at a 12-year high of 4.35% for yet another period, as was widely expected, as the key inflation drivers remain stubbornly sticky in Australia, including housing inflation, food and non-alcoholic beverages inflation, and clothing and footwear, in addition to services and wages inflation, driving up the nation's inflation rate to 3.8% in the June quarter. RBA Governor Michelle Bullock said yesterday a rate cut is not on the agenda anytime soon, as inflation remains sticky above the 2 to 3% target range, and that the RBA actually considered a raise for August's meeting before deciding to hold at the current rate. Ms. Bullock also pointed out that the impacts of sticky overseas inflation and locally the need to see demand and supply come back into better balance. On the corporate earnings front yesterday, Audinate tanked 36% after releasing strong FY24 results, alongside the outlook for headwinds said to impact earnings in FY25. Investors were more concerned about the outlook of earnings depreciation than the strong results in FY24. And Coronado Global Resources shares fell 1.3% on Tuesday after the leading coal producer reported first half NPAT fell 92% on the prior corresponding period, while EBITDA tumbled 62% year on year and revenue fell 10% on the PCP. CRN retained CY24 guidance volumes, cost and capex, and attributed the performance dip on lower coal prices and lower sales. On the commodities front this morning, oil was trading 0.5% higher at $73.03 a barrel. Gold is down 0.4% at $2,395 an ounce, and iron ore is up 0.17% at $104.18 a ton. The Aussie dollar is buying 65.15 US cents, 94.93 Japanese yen, 51.02 British pence, and 1 New Zealand dollar and 10 cents. Ahead of the midweek trading session here on the ASX, the SPI futures are anticipating the local market to open the day down 0.25%. And now let's dive into some trading ideas for your consideration today. Bell Potter's increased a 12-month price target on Lotus Resources and maintain a speculative buy rating on the uranium-focused miner with projects in Africa, following the company's announcement that it has signed the mine development agreement with the Malawi government for the restart of the Kayelekera uranium mine, or the KM mine. Bell Potter's analyst sees positive catalysts at KM, including a final investment decision, offtake negotiations, and construction commencement in the near future. And Trading Central has identified a bullish signal on O Media following the formation of a pattern over a period of 48 days, which is roughly the same amount of time the share price may rise from the close of $1.46 to the range of $1.61 to $1.65, according to standard principles of technical analysis. And that's all for this Wednesday. Have a wonderful day and happy investing.